Hello, welcome to Easy Forex Pips, another video. You need to hear this if you're a Forex trader. Imagine a global marketplace buzzing with activity 24 hours a day, 5 days a week. This is the Forex market, where currencies are traded and fortunes can be made. Two popular approaches to Forex trading are day trading and swing trading. Both offer unique opportunities, but choosing the right one depends entirely on your individual goals and personality. Day trading is like a thrilling sprint. It's all about speed and precision. Day traders open and close all their trades within a single trading day, aiming to profit from small, quick price movements. They are constantly glued to their screens, analyzing charts and reacting to every market fluctuation. Day trading requires laser focus and quick decision-making. It's not for the faint of heart. Successful day traders thrive under pressure and possess a deep understanding of technical analysis. Swing trading is more like a relaxing sailboat ride, aiming to capture larger price swings that develop over several days or even weeks. Swing traders are less concerned with short-term market noise, and instead, focus on identifying and capitalizing on longer-term trends. Swing trading allows for more flexibility and doesn't demand constant monitoring. Traders can check their positions a few times a day, making it suitable for those with other commitments. When it comes to trading Forex, two of the most popular approaches are day trading and swing trading. While both methods aim to profit from price movements in the currency markets, they differ significantly in their strategies, time frames, and the skills required. Let's take a closer look and break down the key differences between these two trading styles so you can better understand which might suit your personality, lifestyle, and financial goals. Let's start with profit targets. Day traders typically aim for small, incremental profits on each trade, often just a few pips at a time. Their strategy is built around the idea of making many trades throughout the day, with the hope that these small wins will add up to a substantial gain by the end of the session. Because the Forex market can be highly volatile, day traders look to capitalize on even the tiniest price fluctuations, entering and exiting positions quickly to lock in profits and minimize losses. This approach requires a sharp eye for detail and the ability to act fast, as opportunities can appear and disappear in seconds. Swing traders, on the other hand, have a very different approach when it comes to profit targets. Rather than chasing small, frequent gains, swing traders are patient. They seek to capture larger price movements that unfold over several days or even weeks. By holding their positions for longer periods, swing traders aim to benefit from significant market swings, often riding out short-term volatility in pursuit of bigger profits. This means they're less concerned with the noise of minute-to-minute price changes and more focused on identifying broader trends and key turning points in the market. Now, let's talk about trade frequency. Day traders are known for their high level of activity. It's not uncommon for a day trader to execute dozens of trades in a single session, sometimes even more. They thrive on the fast pace, constantly scanning the markets for short-term opportunities and jumping in and out of trades as conditions change. This rapid-fire approach demands intense focus, quick decision-making, and the ability to manage multiple trades at once. For many, the adrenaline rush of day trading is part of the appeal, but it also means that mistakes can be costly if you're not careful. Swing traders, by contrast, take a much more measured approach. They might only place a handful of trades each week, or even fewer, depending on market conditions. Instead of chasing every small move, swing traders focus on quality over quantity, waiting patiently for the right setup that offers a strong risk-to-reward ratio. This slower pace allows for more thoughtful analysis and planning, and it can be a better fit for those who prefer a less hectic trading environment. Time commitment is another major difference between these two styles. Day trading is a full-time job. Traders need to be glued to their screens throughout the trading day, monitoring price action, news releases, and technical indicators in real time. Missing even a few minutes can mean missing out on a profitable trade, or worse, failing to react to a sudden market reversal. This level of commitment can be exhausting, and it often requires traders to structure their entire day around the markets. Swing trading, in contrast, offers much more flexibility. Because trades are held for longer periods, swing traders don't need to watch the markets constantly. They can check their positions a few times a day, perhaps in the morning and evening, making adjustments as needed. This makes swing trading a popular choice for people who have other commitments, such as a full-time job or family responsibilities, but still want to participate in the Forex market. The stress level associated with each style is also worth considering. Day trading is often described as high stress and high stakes. The need to make rapid decisions, the constant monitoring of multiple charts, and the pressure to perform can take a toll on even the most experienced traders. Emotional discipline is crucial, as fear and greed can quickly lead to costly mistakes. Many day traders develop routines and coping strategies to manage this stress, but it's not for everyone. Swing trading, on the other hand, tends to be less stressful. Because trades are planned in advance and there's less need for split-second decisions, swing traders can approach the markets with a calmer mindset. They have more time to analyze their trades, reflect on their strategies, and make adjustments without the pressure of immediate action. This can lead to a more balanced lifestyle and a healthier relationship with trading overall. When it comes to required skills, day traders need to be highly proficient in technical analysis. They must be able to read charts, spot short-term patterns, and react quickly to changing market conditions. Mastery of trading platforms, order types, and risk management tools is essential. In addition, day traders often use advanced strategies like scalping, momentum trading, and algorithmic trading to gain an edge. Swing traders, while still relying on technical analysis, also benefit from a broader understanding of the market. They often incorporate fundamental analysis such as economic indicators, central bank policies, and geopolitical events into their decision-making process. By combining technical and fundamental analysis, swing traders can better anticipate major market moves and position themselves accordingly. This holistic approach can provide a deeper understanding of the forces driving currency prices, making swing trading a rewarding option for those who enjoy research and strategic thinking. Ultimately, the choice between day trading and swing trading comes down to your personal preferences, risk tolerance, and lifestyle. Both styles offer unique challenges and rewards, and understanding the key differences can help you make an informed decision about which path to pursue in your Forex trading journey. Choosing the right trading style is a journey that goes far beyond simply picking a method at random. It's a deeply personal decision, shaped by your unique personality, lifestyle, and even your emotional strengths and weaknesses. The world of trading offers a variety of styles, each with its own demands and rewards, and finding the one that truly matches who you are can make all the difference in your trading experience and long-term success. For example, day trading might be the perfect fit if you're someone who thrives in fast-paced, high-pressure environments where every second counts. Day traders are often energized by the constant movement of the markets and the adrenaline rush that comes with making rapid decisions. If you enjoy being in the thick of the action, responding quickly to new information, and you're comfortable with a bit of risk, day trading could be your calling. This style requires sharp analytical skills, the ability to process information quickly, and a cool head under pressure. You'll need to be decisive, able to spot opportunities in real time, and not afraid to act on your instincts when the moment is right. Day trading also demands a significant time commitment. You'll likely spend several hours each day monitoring the markets, analyzing charts, and executing trades. If you have the flexibility in your schedule and enjoy being fully immersed in the trading world, this could be a rewarding path. On the other hand, swing trading might be a better fit if you prefer a more relaxed and less demanding approach. Swing traders typically hold positions for several days or even weeks, allowing them to take advantage of broader market trends without the need to constantly watch the screen. This style is ideal for those who enjoy analyzing market trends, studying economic fundamentals, and making thoughtful, well-researched decisions. If you like to take your time, weigh your options, and avoid the stress of minute-to-minute trading, swing trading offers a more measured pace. Swing trading is also well-suited for people with busy schedules or other commitments. If you can only dedicate a limited amount of time to trading each day, but still want to participate in the markets, this style allows you to balance trading with work, family, or other interests. Ultimately, the best trading style is the one that aligns with your personality, your goals, and your lifestyle. Take the time to reflect on what motivates you, how much time you can realistically commit, and how you handle risk and stress. By matching your trading style to who you are, you'll set yourself up for a more enjoyable and potentially more successful trading journey. Regardless of your chosen style, whether you're a fast-paced day trader or a patient swing trader, success in Forex trading relies heavily on a strong mindset. The markets are unpredictable, and your ability to stay composed in the face of uncertainty is what sets you apart from the crowd. It's not just about having a good strategy or the latest indicators, your mental resilience is your greatest asset. Day trading in particular demands incredible discipline and emotional control. The rapid pace means you're making decisions in real time, often with significant amounts of money on the line. Every tick of the chart can trigger excitement or anxiety, and it's easy to get swept up in the moment. But the best day traders know how to keep their emotions in check, sticking to their plan, even when the market tempts them to act impulsively. You'll face constant wins and losses, sometimes within minutes of each other. This roller coaster of emotions can be exhausting, but it's crucial to remain calm and stick to your trading plan, even under pressure. If you let fear or greed dictate your actions, you'll quickly find yourself making costly mistakes. Instead, focus on executing your strategy with precision, regardless of the outcome of any single trade. Swing trading, on the other hand, requires a different kind of discipline, patience, and the ability to trust your analysis. You might hold positions for days or even weeks watching the market move up and down. It can be tempting to exit a trade early when you see a small profit or to panic when the price moves against you. But successful swing traders know that patience often pays off, and they're willing to wait for their setups to play out fully. You might need to withstand periods of market noise and price fluctuations before your trade reaches its full potential. This means ignoring the urge to react to every minor movement and instead focusing on the bigger picture. It's about having the confidence to trust your research and the discipline to follow through, even when the market tests your resolve. Both trading styles, whether fast or slow, require a deep understanding of risk management. It's not enough to just pick the right trades, you need to protect yourself from the inevitable losses that come with trading. This means setting clear rules for how much you're willing to risk on each trade and sticking to them, no matter what. Never risk more than you can afford to lose, and always use stop-loss orders to protect your capital. Remember, trading is a marathon, not a sprint. By maintaining discipline, controlling your emotions, and managing your risk, you give yourself the best possible chance of long-term success in the Forex market. Ultimately, the best way to determine which trading style suits you is to try both. Most brokers offer demo accounts where you can practice trading with virtual money. This allows you to experience the rhythm and demands of each style without risking real capital. Go ahead and experiment with different strategies, indicators, and time frames. Pay attention to your emotions and how each style makes you feel. The right approach will feel comfortable and aligned with your personality. Choosing between day trading and swing trading is a significant decision for aspiring Forex traders. There is no one-size-fits-all answer. The key is to understand the demands and characteristics of each style and find the one that resonates with your personality, lifestyle, and risk tolerance. Take your time, do your research, and don't be afraid to experiment in a risk-free environment. Remember, the Forex market offers incredible opportunities for those willing to learn, adapt, and persevere.